Welcome to the System Simplified podcast, where we feature top leaders who share stories on how to successfully systemize a business. Now, let's get started with the show.
Hello, Adi Klevit here with the System Simplified podcast, where we interview top entrepreneurs, founders, and thought leaders about systematizing a business. And this podcast is being brought to you by Business Success Consulting Group. At Business Success Consulting Group, we create custom processes and tailor-made business systems so businesses can thrive and grow. All right, and today's guest is Cameron Bell. Hi, Cameron.
Hello, Adi. Thank you very much for having me today.
Oh, you're very welcome. And I'm so excited about our conversation today because, Cameron, you are a partner at Fairmont Capital Partners, which is a lower market private equity firm, and you focus on tech-enabled B2B companies. So let's clarify, the lower market, meaning companies that have a revenue between $1 million and about 30 million, right?
Yeah, so there's a few different sections in private equity, or a few different areas that people play in. There's obviously the larger market, which is the bigger names you may have heard of. Then mid-market, they usually sit around, now these numbers do vary, but let's say a company with revenues from maybe minimum 50 to 100 million, up to several hundred million, maybe middle market. Then there's a lot of companies, a lot of private equity firms that play in what's called lower mid-market, which again, the numbers could be anywhere from maybe 20, 30 million revenue up to 100 million. We play in what we call the lower market. So it's a really interesting sector, which is mainly dominated by VC firms who would play in this sector with a revenue. Our revenue range that we look at is 1 million to about 30 million in revenues. Now, the reason we're very different from a VC firm, we've got actually a little tagline or a motto where we like to partner we like to find companies that are too boring for traditional VC, but too small for traditional private equity. So that's where we find our really, really sweet spot of the companies that we like to work with.
That's interesting. So what would be like a VC company, a venture capital, what interests them as opposed to what interests you?
So the model or the thesis behind VC is, and I don't want to speak for every single VC firm out here, obviously, but the general consensus behind VC is you want to invest into the next unicorn or the next startup that's going to 1,000x or even 100x your potential portfolio. Generally, in a VC fund, however the larger the fund is, there's only 1 or 2 companies or 1 or 2% maybe of the overall fund that actually pays for the return. So they've got 1 or 2 very, very large performing companies. Maybe there's an incredible investment they've made in, say, a Canva or Atlassian or things like that. Obviously, Australian companies. But there's a lot of companies that probably either break even or lose money for the fund. Our model is not that anyone wants to say no to investing into the next Canva or the next unicorn, but our model isn't to go looking for these kind of companies. We look for companies that we find much more boring, where we're looking to maybe double or triple the size of the company in the next few years. So it's probably a lot more, we probably look for more conservative companies. We're not aiming to have really, really high risk in our portfolio. But then again, we're also not expecting to have these incredibly high returning companies.
Makes sense. So when you say B2B enabled, so tech enabled B2B companies, what does that mean?
So B2B is obviously business to business services. So we find B2B companies are much less affected by any kind of economic upturn, downturn. There's a lot more stable business purchases as there is direct to consumers. We find the life of these businesses are generally longer than a lot of consumer-driven businesses. And we also find that these kind of companies may have a more natural inkling towards the slow, steady growth, which is kind of what we look for in our portfolio. Now, tech-enabled is a very, very broad term. Now, we're not directly looking for, say, a really modern or an upcoming tech company. What it probably means is a business that isn't stuck in the Middle Ages, that either uses everyday technology to run the business, or a really good analogy is we can come on board and we can assist the business by implementing tech into the company, which maybe they haven't looked at before. And obviously then we can maybe look at, okay, how can we reduce some of the overheads? How can all this, I won't go into too much detail, but there's 3 key areas that people look to bring tech into a business. One is for increasing revenues. How can we use tech as a sales driver to increase revenue? 2, how can we use tech to lower our costs? Maybe it's Maybe it's cutting out some other expenses that the business was using, overheads, things like that, or added security. So these are kind of three factors, with the two main we look at is increasing revenue and reducing costs by implementing of tech.
Absolutely. So what would be some examples of companies that you work with in terms of the industries?
Yeah, so obviously B2B is broad. It can be across a range of different sectors. We've got a really great company. They work across IT services and software services in enterprise level companies. So you think of these enterprise companies; these are tier 1, tier 2 companies, obviously servicing globally. Some are listed in Australia, some are in international markets. Now, these kind of companies all use softwares to run their business, and there's a whole different raft of them. But the ones our company focuses on is SAP, Oracle, IBM, and Microsoft Azure. So what this company looks at is it comes into these enterprise level companies, and it's very, very specialized in those four softwares. And it looks at how can we lower costs in using these softwares, and then it kind of, it comes on as a bit of an advisory consultant, but then it also looks at getting on a managed service provider where it can manage these contracts ongoing. So it's a very, very niche company. It's considered probably too boring for a lot of investors. We love it because the company is growing 100% year on year. There's such a big demand for it, and it boomed really, really well over COVID. So companies like this, where we find have a real niche spot, they maybe sit outside the eyes of the normal traditional, I don't want to say VC investor, but the normal traditional early stage investor.
Interesting. Okay, good. So, we have listeners from a variety of industries, etc. And I go, okay, so why would this podcast be of interest to me? And I think it's very interesting because we're going to discuss, you're going to basically walk me and our listeners through your process, or the process of your company, of how you make the determination that a business will be good for you to invest in, right? So with the hope that our listeners can listen to it and they can see what can make them more attractive to private equity firms in case they are looking at selling or partnering with a private equity firm, but also from the standpoint of understanding the process of looking at your company and how do you actually use the process in order to qualify the people that you do business with, right? And then we're going to talk about the front end of deciding, the process of deciding, or the systems that you have of deciding if somebody is a good candidate to work with and partner with. And then once you make the decision, what is your process to integrate yourself into the company to achieve the goals that you want to achieve? So let's start with your process or your system of how do you make the determination if a certain company is good to partner with?
Yeah, sure. So I'll start off by saying every firm is different. So obviously I'm speaking very much for ourselves. This is in no way financial or investment advice, and every different private equity firm you speak to is going to have a different thesis or model on this. So as we said, we focus, obviously the key metric we look at is the company's revenue. Now, obviously we do like profitable companies, but it's not a number one factor for us. So we look at companies that are producing that kind of revenue ballpark between 1 and 30 million. We then look at, is the company profitable or is it very close to being profitable? So we do like profitable companies, maybe an EBITDA of around 15% or above. But if they're not, it's not a deal breaker for us, but we have to then look a bit closer and say, okay, can we see a path to profitability? We aren't a firm that looks at, again, this is more that VC model where they're very willing to put large amounts of money in for that kind of 3, 4, 5, 7 year plus before they can receive any return back. Private equity more sits around the fact is they like to buy cash flow generating assets. So that's kind of one of our first things we look at in terms of the profit and the revenue of the companies. Then we look at a bit more detail of the company. Okay, so another area that we in particular really like to look at is we like to look at family or founder-owned businesses. Now, what this means is if they're family and founder-owned, it often means that the business may have been trading for several years or even several decades under the same family. And we find that there's maybe certain systems and processes that they have, or certain operations that they have, certain tech they don't have, where there's a lot of value that's potentially being left on the table. So they've generally got a very good, strong customer base. They may not be growing as much as they could be because I don't want to say that the owners or family or founders have become complacent, but they haven't maybe had more institutional backing behind them to assist and help grow the business. So this is an area that we really, really like to look at. Businesses that, again, we call them family or founder owned, and that also would generally mean that they haven't had institutional capital injected into them already. So sure, they may have had funding from family, friends, or maybe a seed round at some stage, but it's not a company where we don't really talk about Series A, Series B funding. That doesn't really apply to kind of where we look at. So, I mean, some examples of industries we discussed already around the B2B sector. Now, B2B can be across anything. It can be manufacturing. It can be consulting. It can be more of a SaaS platform. Any real service that you might think of that's B2B. Now, they're probably the first and foremost. Then we start to dive a bit deeper. Now, a key one, and this is really hard to apply systems and process to, and I'd love to actually hear your feedback on this as well, is the individual or the people behind the business. So as much as I think I'd love to say we've got a very clear cut criteria of what a person or a team, let's say it's a management team or a founder, has to meet before we decide to invest, a lot of it I think does come down to maybe gut feeling or a lot of interactions, several meetings, and how that person, obviously you want to first of all get along and trust a person. That's really key and foremost. But also, we aren't a firm that wants to come in and buy 100% and take over a business. We want to come in, and I think I said partner before. We look to partner with a company that's looking to produce a large exit over the next 3, 4, 5 years. So part of which we'll talk about in a bit more in a second is obviously this is the kind of companies we like to look for. But then how can we help add value? And over this next 3 to 4, 5 years, as this primary owner wants to do a larger exit, how can we maybe bring in certain systems and processes, whether it's across the sales arm of the business, whether it's across the back end, the operations, the tech, the security they use in the business? How can we help streamline these things? How can we add value to increase that company's value upon exit, which will obviously increase the founder's exit value. And obviously, this is how we make our money by increasing the business.
Absolutely. And to answer your question, there is a system there because obviously you ask specific questions in order to identify if that type of individual is the one you want to work with. And yes, people are different. So it might not be just like everybody has answered the same, but you do have your process of asking those questions. We have the same thing. The clients that I like to work with are entrepreneurs that basically companies that are growing and lacking consistency, right? So that will be, but I still like to work with founders or leadership teams that want to grow and scale, right? They have that mindset. They don't have the mindset of, okay, I come to work every day, I do the same thing, I go home and that's it, right? But I'm looking for those individuals that have a vision, that when I ask them, where do you want to take the company? They will all of a sudden light up and they will say, okay, I want to go here and here. And this is my dream and this is my vision. That's what I want to do, right? So you can see that they have that drive. So that would be like an example of something that will indicate like that gut feeling that you're talking about. What does that consist of? So to answer your question in terms of like, what is the system? What is that gut feeling, right? Is when an individual, start talking about their vision, about their dreams. They have imagination. They have something to look forward to. Whatever it is that creates that gut feeling. And also the opposite. What gives you the gut feeling? I don't want to do business with that person. It might be that they don't want change, or they're afraid of looking at new ideas, or they're very set in their ways, right? So there can be something there that tells you yes or tells you no. And it's just a matter of really identify what those soft skills are or what those characteristics are. So that is to answer your question.
That is very helpful. And you made me think of something really, probably our biggest challenge, I think, is because we look at this space with family-owned businesses, there can be a thought process of this potential founder, hey, I would like to sell my business and I'd like to increase the value. But a lot of the times they are very reluctant to change. That's probably one of the biggest challenges we face with the individuals behind a business, especially if they've owned it themselves for the past 20 years. And not that we're the kind of company that's going to come in and say, this is how you need to run your business. But where a big red flag we look for is someone that says, I just need money to come into my business and then I'll run it. That's I'm sure there's plenty of other investment firms that operate that way. We're very, very much focused on a longer term partnership. So how can we add value, and how can we help the business?
For sure. And that's something I run into as well. Like, when we start a project with a company, one of the things that we say, because change, it can be scary, right, to people, especially if let's say you're talking about a family-owned business, that's the way that they've been doing it. So, and I'm sure you do the same. You don't just go in there for the sake of change and change for the sake of change. It's really like being patient and learning the systems, learning what's going on, and then using your expertise and your knowledge to make suggestions in order to introduce that change gradually, but not change what's actually working.
Yeah.
But it's also like if you're introducing technology or introducing maybe more efficient ways of doing it, it can still be along the line of what is working, right? I mean, let's say you have a certain product as a company or a certain service that's why people come to you. But there is a bottleneck because it was basically based on one person, but that person can only, let's say they can deliver to 10 people, but now you have 100 people that are demanding that service. So what can happen is that you can't deliver anymore, but you are very insistent. You as the business owner are very, very insistent on that service. So it's like the question is, why are you insistent on that service? Because that is your hallmark, or people know you by it. But then the question is, how can we use technology, or how can we use something that is more efficient in order to still maintain that, but continue it forward, but in a bigger scale, right? So that's just like an example of it's a change, but not really a change. So to change for the sake of change is not what we're looking for. We're looking for a change that will basically push forward all the successful actions and take away those that are not successful in order to be able to grow and scale.
Yeah, no, I completely agree. I mean, I do love change. I think it's a good thing generally. But change costs money, it costs time, it costs energy. It doesn't need to happen if it doesn't need to happen. There's no reason to implement certain changes if things are working properly.
Right, exactly. Good. So that's basically your process of evaluating who do you want to work with. So then you decided, okay, this company will be great to work with. So now the question is, how do you, and I think we started discussing it with the change and how to make the change, but what are your do's and don'ts when you go into a company and you partner with that company? How do you proceed from there?
Yeah, so we see, and I'll probably just add on to the first question. There is probably a bit more detail. We'll get into obviously financials, auditing, a lot more DD, but more a lot of that is probably maybe a bit more detail focused. And this is they're the main criteria that I went through. So the do's and don'ts. So a big thing is we especially from day one, we sit down and have a weekly meeting with the team that we've partnered with. I personally, if they're obviously based in the same city, I like to get in the same office with them, sit down, get to know the team. Something we can't stress enough is we become a business partner to the company. We don't want to just be one of these token private equity firm that invests a bit of money in, holds board meetings, sets KPIs, ensures the KPIs are hit, starts cracking the whip when these things aren't met. So we're very much about that long-term business partnership. So I think that's why it's a really big thing for us to find that right person. So that's probably a big don't, is that's not how we want to operate. And probably a lot of do's. Now, our main do, or our main goal, is to how do we get the business. Now, let me backstage a bit actually. Generally, in the space we play in, we might see a lot of owners or founders who are interested in selling the business, and the business probably isn't quite where it needs to be. And it's not quite where it needs to be because of, and it's not because it's a bad business in any way, but maybe the owner has ran it as an owner-ran business for the past 10 years. So there might be certain financial add backs into the business. There might be certain, whether it's the systems processes, whether too much things are stuck in the owner's head. So we basically use the next 3 to 5 year window on creating this business, not creating it, but taking the business outside of the owner's head a lot, systematizing and processing a lot of the procedures. And we focus quite heavily on sales. So how do we get a good sales pipeline where it's consistent referrals coming through, consistent advertising process. So we know in the next 2 months, we're going to have this approximate amount of sales or at least new leads coming through. So that's a really big focus. Obviously, there's definitely the systems and processes behind operations, whether it's financials, whether it's admin of a business, like I said, security, things like that. Those are probably a bit more easy to implement because you can maybe bring in a consultant to help manage it. Whereas I find the sales is a lot more ongoing. Often you'll find the owner still has some degree in the sales of the business, which is completely fine. But if the business is going to be sold, let's say in 4 years' time is our aim to sell the business, and the owner wants to finish up and have no more involvement in the business, and that is uncommon. The only reason that can happen is if the business can show that it can sustain its growth without the owner there. So that is really one of our key goals. And obviously, this is only if the owner wants it as well. But instead of an owner selling a business right now and getting a deal saying you've got to stay the next 3 years in the business as an employee, which a lot of people don't want to do. They feel very tied to the business after that period of time. So that's where we look at this co-ownership or co-partnership with the owner over the next 3, 4, 5 years, where we can take everything, all the knowledge he has or she has in that brain, take it out of the business, get it into systems, processes, operations, bring in a management team, bring in a general manager, bring a CEO, bring a C-suite team, however that business looks. Obviously, we manage a lot of it in ourselves. We also bring in the right consultants to help do it. But at the end of that period, we've increased the sales, increased the revenue of the business. We've ideally lowered the cost of the business. And then we've let's say, call it documented, or we've processed all the information we can outside of that owner's brain into the business.
Perfect. That is exactly, I love that. That's exactly, it's needed because that way you can actually systematize a business or make it something that is unrelated to the owners, just, it basically not dependent on, not unrelated, but not owner dependent. And that gives the freedom and the independence that the owner wants so much, right? So that's definitely, I'm sure you also touch on culture and building like a sustainable culture so the organization actually continues to expand and exist, right?
Yeah, culture's a really, really big one, especially there's always a fear of private equities coming into the business. What's going to happen to our culture? So we think ourselves, we're a small firm, obviously, but we think we have very strong and very good culture. And it's not that we add that culture or make that culture into our portfolio companies. Every company has a different culture and we love and we really, really want to be part of it. But we are part of it, but it's not us coming in and saying this is exactly how the culture is going to be. Obviously, every business has its own unique personality and it has its own unique team, and that really adds and creates. But I think a really, really key thing is, obviously, the culture, ensuring that staff have that. They know that the company is somewhere they want to work, and obviously, it's somewhere we want them to work as well. Probably another thing I'll just add in is the ESG as well. It's obviously a very, very prominent side. I'm not sure if your listeners are aware, but in the last 3 years, and I think especially last year or so after COVID, and including over COVID, ESG, which is environmental and sustainability goals set by the UN, and there's I believe there's 29 different categories. How important these are to a business. So, and they're becoming very, very important in terms of investment into business. So a lot of private equity firms, VC firms, investment capital firms, whatever it is, even larger corporations who are maybe looking to buy someone, they look very, very strongly into the ESG capabilities of a business for obviously their own values, but for their shareholders' demands, their stakeholders' demands. Culturally, it's become very, very prevalent. So that's something we look very heavily at. How can we ideally increase, if not implement, certain ESG practices and processes in the business?
That's fantastic. So I think, Cameron, really the common denominator of the last part of our conversation is basically how to make the business sellable, right? And like how it is, because it's just like, you have to make sure that it's not owner dependent or an individual. So it might not be the owner, it might be like the staff member that has been there for 30 years, right? So it's really extracting that, it's the knowledge transfer, it's getting that knowledge out of their heads into a documented system. It's documenting those processes and procedures along the lines of the sales, the operations, etc. It's really documenting and creating that culture so it can continue to survive after the owner is not there anymore. And it's make sure that the business is sustainable, that there is sustainability, that it aligns with the sustainable, with acts that are sustainable. So the business actually moves into the future, right? And what is needed. So I think that part of like how to ensure your business is sellable and increase profitability. It's a great advice that everyone can use. And obviously your firm coming in helps the business by injecting the amount of the financials that are needed, right? I mean, the energy, the finances, and also the expertise. So then together as a partnership, you move forward and into the goal of making the business more profitable and selling. And not just, I would assume it's not just the profitability, it's also the legacy into the future, right? Because you can have a business that an owner or family-owned business that built it up to a certain point and go, what next? How do we get it to the point where the business continue to survive after us?
Yeah, no, legacy is a big one. I mean, we're speaking with a business at the moment. The business, it's a great business. It's doing about $3.5 million a year, good profit. So this is a really nice sweet spot for us. It's obviously not huge, but the owner who's had it for about 15 years, and it grew for a few years, and then it's probably stalled for the past 10 years. And again, it's not because of the lack of business, and it's not because of the lack of the owner's skill set. It's more because the understanding or the knowledge and the expertise hasn't been there to know how to take it to the next level. So these kind of businesses, what we find is there's no way the owners or the founders can just let that business change straight away, or they're very concerned or very mindful about what the legacy is of themselves in that business, the reputation, the staff they've got in the business. That's obviously a huge one. So this is something that obviously the sale is very important. The financial figures, the financial numbers are very, very important. But definitely, are my staff going to be looked after when I left? Is the company going to continue growing? Is there whoever potentially buys it? Are they going to strip it? Are they going to take all the assets into their own business? Are they going to white label it? This is something we like to know from day one. Some owners, some founders may be focused purely on the sale number, which is completely fine. A lot of them don't want to sell to a large conglomerate who's just going to swallow them up and take their staff away from the nice kind of maybe family founder-run business they were part of into a number 7,031 on a corporate balance sheet.
Absolutely. Wow, that has been like an amazing conversation, because we covered the ground of like, how do you decide that you want to work with a company, right? And then really create like what systems do you implement when you go into a business? And then, just like the overall idea of maintaining the initial purpose and the vision and the mission of helping the owner maintain that of the company and the owner, and how you can partner in order to create a win-win situation for everyone.
Yeah.
So that's great. Yeah, go ahead.
It's been a really good chat. I mean, obviously, when you asked me some of these questions, I had a chance and before the show, I was like, okay, what are our exact systems and processes? And I think, you know this much better than I do. A lot of the times, they're definitely not documented well enough. They're probably not even thought out well enough as a partner of the business. A lot of the stuff is in my head as well as my other partners' heads as well. So it actually gave me a really good opportunity to think, okay, how can we maybe documentize and systemize our own things that we are working on? So thank you.
You're very welcome. Well, Cameron, if people want to reach out to you, how do they find you?
Yeah, sure. I'm on LinkedIn, and happy to provide my email. Maybe we can post it in the notes. It is cb@fairmontcappartners.com. And I'll pop my LinkedIn if that's all right with you. I'm happy for people to reach LinkedIn or email at any time.
Great. All right, fantastic. Well, again, Cameron, it's been a pleasure having you as a guest, and thank you so much for all the knowledge.
Oh, thank you for having me so much. It's been a great talk.
Thanks for listening to the System Simplified podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.